and gentlemen, good day and welcome to the earnings conference call of RBZ Jewellers Limited for Q3 and 9 months FY2024. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. If you need assistance during this conference, please speak to the operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us from the company Mr. Harit Zaveri, Joint Managing Director, and Mr. Harshvardhan Bardwaj, CFO from the company. I now hand the conference over to Mr. Harit Zaveri, Joint Managing Director. Thank you, and over to you, sir.
Yes, good afternoon, investors. So this is the first earnings call of RBZ Jewellers Limited, and let me brief you about the industry and how the second, that is the manufacturing section of the jewelry industry works. We are an organized manufacturer and supply our goods to organized retailers. So generally, on the system, in the 4 quarters that we see, quarter 3 are the best for the retail people and the wholesale people. Wholesale retail, the people who do have people who supply to the retailers, independent retailers. As far as organized retailers are concerned, they generally do their purchasing well in advance and before the Diwali or the festive season begins. So quarter 3, as we are also into the wholesale segment and the retail segment, plus we are servicing to the organized retailers. As far as quarter 3 is seen, it's a promising figure of around from last year that we have done around 92.60 CR. This year we have done around 115 CR, and there has been an increase in employee expenses from about 1 crore 59 lakhs to 2 crore 15 lakhs. We were already going for an IPO, and we had started building the infrastructure up. So the reason of a very heavy increase of around 30% plus in the employee cost is because the infrastructure was already ready to be. It is not that we get the money. It was not possible. But after that, we start to deploy the resources. It was done well in advance. And another rise that we have seen is the finance cost that has risen. That is the result that we had bought a retail property, and the long-term loan of 19 crores accumulates the interest of around 1 crore 36 lakhs, and that was one of the reasons both the costs had gone up. Still, we have done a profit before tax of around 9 crore 14 lakhs from the last year, which was 7 crore 88 lakhs, and I think the PAT are 594 from last year December 22. This year's 6 crore 31 lakhs. Generally, from RBZ Jewellers Limited, the quarter 2 remains strong in terms of organized retailers getting the supplies in advance. And quarter 3 also remains very, very good in terms of the retail and the wholesale that happens. So I'm looking forward for all the questions that investors might have, and what they want to understand.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question will press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question is from the line of Saransh Sethi from Summer Wealth. Please go ahead.
Hello, am I audible?
Yes, you are audible, sir.
Sir, as I can see, the retail share in revenue has increased to 41% and 23% in FY20. Do you have any special plans to increase your presence in retail market?
I'm sorry, the voice is little blur. Can you repeat the question again?
Sir, I wanted to know, do you have any plans to increase your presence in retail market? As I can see, the retail share in revenue has increased to 41% and 23% in FY21.
See, I must first make you understand about business model. The business model is job work. We have wholesale and we have retail. So with this perspective, let's say if the revenue has increased from let's say X to let's say Y, we need to really understand what the volumes have increased. So in FY21, we might have done a great volumes in terms of let's say job work services. And in FY22 might have done a great a good performance in terms of retail and wholesale, and also had a decent growth in job work. So on an accumulated level, let's say if you see to directly answer your question, yes, the revenue will increase, and we are looking for certainly we are looking for a substantial and a significant rise in terms of the volumes that we had done in previous years. It was 1059 kg. We are looking for a 1200 kg volume this year, and considering this kind of performance, I think we are on track with whatever we have said. But this year certainly we have because the funds are just coming on the end of almost the December end. So the utilization will in industry, the season begins from month of July onwards. Month of July onwards, I think we are expecting that due to the increase in variety and inventory, there can be a sharp rise in terms of sales and sales figures. And yes, in coming 2 years, we are 100%. We are sure that we will expand to whatever we have committed on any of the media or to any of the investors. But certainly, we are expecting a significant growth in the company for another at least 2 years for the funds to raising the funds and also the debt that we will be raising in future.
Sir, do you have any plans on expanding the showroom count?
See, we have already we have a showroom of around 11,000 square feet. We are expanding 3,300 square feet. The utilization was only 6,600 square feet. We are again utilizing the unutilized area of the showroom was 3,300 square feet, and we are utilizing it now. So I think by October or August we should be ready with the additional space, and the showroom has got itself a capacity of around 400 to 500 crores, touching the top line of 400-500 crores. So for another 2-3 years, I think that we are in a right infrastructure and space that we have, and I think the retail is going to expand as well as the wholesale is going to expand at the same pace. So, operationally, the showroom, if once the infrastructure is already ready, I should be looking at another location as of now.
Sir, secondly, I want to know about your hedging policy.
Generally, when we say that there are 3 different business segments, in job work we get gold in advance, and we generally do the services. So around 60% of the business or 50% of the business which is of job work services, you can say that we get the gold directly from outside, and then we whatever we save by manufacturing, we keep it in the closing stock, and the rest goes to the client. So talking about the 40%, whatever we generally sell in terms of gold volumes, we generally purchase at the same day. So this is a general policy of gold that we hedge, and our accounting is done on the basis of average inventory. So the current market size of inventory, if let's say 65,000. The average in the accounting things, because it is on the weighted average method, the inventory would be at a quite lesser value. So in that ways, we play safe in terms of, because of the weighted average method, we generally play safe with the disparity between the market, current market price and the weighted average of the book inventory value.
Understood, sir. Thanks a lot.
Thanks.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Rajesh Singla from VTG Capital Services LLP. Please go ahead.
Hello. Hi, am I audible?
Yes, Rajesh, you're audible.
Yeah. Hi. So I just wanted to reconfirm from you. So in the previous questions, the remarks you had said that your retail showroom is capable of generating 400 to 500 crore kind of revenue. So is that correct, or did I hear correctly?
Yes, it is correct.
That one retail store can generate 400 to 500 crore kind of revenue.
Yes, Rajesh bhai. See, in general also, if you check any of the stores from wherever you're located, the benchmark stores that you have in your city, let's say in Bombay or anywhere, I'm not telling anything which is coming from, it's in the industry itself. If there's an established retail showroom of 10,000 square feet, it is easily capable of generating a volume of 400, 500 crores. It is generally, if you have a lot of stores, let's say there are smaller stores, there are bigger stores, and then the average gets lesser because there are some stores who are yet to mature, some stores who are not in their growth phase, some stores are facing different kind of challenges. But here we are in this city, we are strong, we are established, the brand is there. So operational efficiency is there. So what I'm talking, we should be able to deliver this 400, 500 crores of, retail sales. And as far as I'm seeing, the numbers that I've quoted with the square feet that we have, I think it's 100% achievable. And it's already happening in the industry.
Right. How much are we generating right now from this retail store, and this 400, 500 crore can we expect it by FY26?
400, 500 crores, I think by FY26-27, by FY27 we should be able to do it. But yes, year on year we should be able to see a growth of around 35%. And I think within a matter of 3 years, we should be easily able to double it from this year onwards. Let's say, and last year we had a sales of around 138 crores.
Okay. And one more thing, so one more question on that. So you recently raised 100 crore from IPO, and I was going to one of your video on YouTube. So there you mentioned that you probably will raise 100 crore of debt as well. That gives you fund capacity of around 200 crores. And which is like substantially, which will cover at least to double your scale from current levels. If I look at your working capital numbers, so you need probably 156 crore kind of working capital. So 200 crore additional funding should more than double your current sales. So when can we expect the full utilization codes, which you would be having, which you currently have, and can we expect the FY26 or to be like 100 or to show the results to the utilization of the funding which you have raised recently?
Correct. I think the equity fund should be 100% utilized by the second quarter of this next financial year, and the debt fund should be again utilized. Once we get the limits sanctioned and when it is approved, I think the fueling in this industry, the whole industry starts from the month of July, February 15 or February end. Then it slowly diminishes, at least in the northeast region. South has Akshaya Tritiya in it. And but generally, yes. So the whole we will be able to see the spike in the sales on the start of this season, I think in the month of July, and 100% equity will be utilized by quarter 2 of this the next financial, that is FY25.
Okay. And any plan to have one more retail store in the next couple of years, like when you are expecting to add your another retail store of a similar size?
So we are 100% focused on the manufacturing side because right now there's 40% of the retail in India is organized and only 15% of the retail manufacturing is organized. So right now the demand that we are seeing from the organized retailer is quite strong. I think these are the low-hanging fruits, and we are aiming to become the player, the topmost player in the occasion segment of the jewelry industry. So in which right now also 80% of the volumes that we do are in the manufacturing side, and we are short focused on that. And with this funds coming in, with the debt funds coming in, we are going to expand that thing. And we, the disparity is very heavy. There is only 15% who are catering to 40% of the organized retailers, and I think we are the player in that category. So we are focused in the manufacturing segment also. While the expansion in retail has to go on continuously, I think we are at the right pace right now. Let us understand the top line let us reach the top line in whatever years that we have planned. And I think we should be able to continue with the same ratio of 20:80. But this is the time when manufacturing, if really focused upon, can deliver strong results.
Rajesh, does that answer your question?
Hello, can you hear me?
Yes.
Yes, Rajesh, I can hear you.
Yeah. Sorry. Okay, so maybe just last question to summarize. So based on the numbers that you have spoken so far, so it looks like 400-500 crore of retail revenue at FY27 and probably 300 crore kind of revenue, maybe 400 crore of revenue in the rest of the business, driven by the IPO money and maybe one more fundraising until FY27. So FY27 could be kind of 800 crore kind of revenue we can expect?
Yes. That is what we are expecting.
Yes. In terms of margins, so should we expect a further improvement in margin given the change in business, or do you think that the product mix will remain same, the segment will remain same as we move forward, despite the fact that you are more on the manufacturing side? So should we see that you would be able to maintain 13-14% EBITDA margin going forward, or we can expect further improvement from here on?
I think the figure to see the business in which we are in, there can be various products or various kinds in which we sell the products. It can be in terms of services, it can be in retail, it can be in wholesale. But as a company, what we really look at is, or what we are sensitive in is, if we are getting rupees 100, are we able to generate 20-25 rupees from that? So return on equity or return on capital employed is what we are sensitive. And if you are asking about the return on equity and capital employed, I think we should be able to maintain the track record that we have.
Okay. Thank you. Best of luck.
Thank you. Ladies and gentlemen, you have pressed star and 1 if you wish to ask a question. Next question from the line of Prateek Bandari from Art Ventures. Please go ahead.
Yeah, hi. Good afternoon.
Hi, Prateek. Yes, you're audible, Prateek. It's slightly blurred there, but it's fine.
Okay. So, just a couple of questions from my side. As you stated that you are focusing on manufacturing and the retail would, simultaneously grow as well. So, out of your total revenues, how much is the contribution coming from manufacturing in terms of revenue?
See, sir, in terms of revenue, things can differ, but, revenue when you understand our balance sheet, the component of volume is more critical because services, only the labor part get actually, on the top line of the balance sheet. So generally, let's say we have done 600 kg last year in terms of services, the labor income might be just 10 crores or what, so the top line might indicate just 10 crores. But, that is a very huge component, and that actually does not make us a company who is producing, let's say, a top line of 280 crores or odd. But it actually, if you see it from the right perspective, we are a company which, does a business of 550, 600 crores. Because the service thing is not getting accumulated on the top line. So now to answer your question, we are 100% focused in manufacturing. The value is entire, right? From retail to manufacturing is what we are actually having. But because of the disparity in the market, that is 40% of the retailers are organized and 50% of the manufacturing is organized, we have I think these are the low-hanging fruits, and we should really try and get that, thing as fast as we, as we can. So I think 80% we are into manufacturing, 20% we are into retail, and the proportion will continue in the same manner.
Okay. And so where do you see your, the top line at the end of this year and for the next year?
So this year, I think reasonable top line of around 340-350 crores. I think that is something that we should be achieving. And by next year or next to next year, I think the 2 years, I think. The top line can vary according to product offerings. I might produce products which are high margin products or which are low margin products. That is different. But let's talk about that in the next 2 years we are planning that we should be able to double the balance sheet. I think from the PAT of 22 crores that we had in the fiscal 23, we should be able to make a PAT of around 40-50 crores, 40 crores in terms of in FY26 or so on. So return on capital employed and return on equity should be, I think, consistently seen. And the industry season starts from the second quarter of every year. So I think the spike should come from the second quarter, should be very critical, and third quarter, quarter 2 and quarter 3 of fiscal 25 is actually critical, sir. So, that will actually say us that if are we in line, because this year I can say that yes, we are in line with whatever we have said, around 350 or 350 crores of turnover, and, I think the PAT also should, go on the same trend, so, but next year, I think 26, we should be able to, completely utilize the balance sheet size, raising the debts and everything. So balance sheet of 200 crores, that is generating 22 crores PAT, balance sheet of 400 crores, that is 100 crores of equity plus 100 crores of debt. We should be able to generate the similar level, the trend should continue.
Okay, so you mean to say that by FY26, the PAT would be somewhere between 42 to 44 CR, right?
Correct. So that is what we were expecting, sir.
So, and what kind of debt we are expecting by the end of this financial year?
Sir, I think that is something, but we will have the same trend, sir. I think the trend will continue. Let's say we are having an 18 or 19 crore rupees of PAT in 9 months. I think you can easily understand the trend, what is going to happen in the coming 3 months.
All right. And do you have, any CapEx plans for the, upcoming 2 years?
Sir, see, right now, currently, we have enough capacity as far as the equity right now, what is getting funded or the debt which is getting funded. But we certainly want to scale ourselves, because the opportunity is there to scale. We are looking for scale, and we are looking for the right time to get ourselves invested in these things. So, yes, I think we are looking forward for having a handsome facility of around 6 to 10 tons, and but again, that requires the correct timing. That requires a right kind of, because that would again require a very heavy working capital. So as of now, whatever we have raised plus the debt we have raised, we have got an investor to, generate returns from that. But as far as the vision of company goes, it was 100%, we are in for scaling. So, in that perspective, yes, the capex might happen, but I cannot exactly pinpoint and tell you when, but it is in the mind of the management.
Right. And I could see, from your balance sheet that the borrowings have certainly, compared from March 2021 to, somewhere at the present moment, it has ranged from 60 crores to more than 100 crores. So, what kind of, finance cost, in terms of percentages, what is your finance cost? And the interest is also climbed up.
Yes, sir. The interest is, see, there are short-term borrowings and there are long-term borrowings. The retail unit that we had taken a long-term borrowing, purchased that unit. We have taken a long-term borrowing of 19.5 crore. The company property is in the name of company only. It's both the properties are owned by company. The registered office also is in the company name, and the retail showroom is also in the company name. So, that is one of the reason. Otherwise, if you subtract that, it will be from 60 to 80. And if you see the 3-year or 4-year record, it was 50 crores when the gold rate was 30,000 rupees. It has just increased to another 30 crores. That actually, says that, in terms of kgs, we have not increased the debt to the level that the gold price has increased. That actually, we were having a good opportunity in the market to, grab the market. And also, the bankers have their opinion that, okay, we can increase only 20%, 25%. The bankers go quite conservative in terms of increasing debt. I think the company should have, given this kind of figures or given the business that we have and the opportunity we have, we should have been able to raise more debt. But okay, around finance cost has remained the same. Yes, we have got an impact of 1.36 crores this year because of the long-term debt that we had increased and no equity funds coming in. I think the equity funds are in resources of employees have been already pulled. I think you can easily see that there's a 37% rise in the employee cost. That is because of new and good employees getting in the company, for the future expansion to happen. Easily the balance sheet will be able to show you that, all the infrastructure and the costs that are being built up. So next year or next 3 years, you will be getting the result of it. Yes, sir. I think the debt, I have already told you, the reasons. I think from, if you consider 50 crores also, 150 kg was my debt according to the rate of 30,000. If you just double the rate at 60,000, my debt has actually reduced in terms of kgs.
Right. And as you stated that, retail showroom of, approximately 10,000 square feet size is capable of generating a revenue of 400 to 500 in between that range. And from other businesses, you will also be generating revenue which will be in the range of 300 crores. So do you mean to state that by financial year 27, your revenue would be ranging somewhere between 800 crores?
Correct, sir.
Okay. And just a last question from my side. What kind of margins we are expecting for this year and next year?
So the margins are, quite, I'll tell you, quite subjective. You should actually, the right question could have been, that, what are the volumes that you're looking for? So if the volumes are, let's say, consistent with the same product category, I think the margins is just a derivation. Return on capital employed or return on equity is what we are actually aiming for. Generally, we don't aim for the top line also. We can sell a low margin product and get the top line. We can sell anything, but return on 100 रुपए लगाया ना सर, 100 रुपए से 20-25 रुपए बनना चाहिए, वो कंपनी का जनरल फिलोसॉफी है. So, अभी the same product category and all, yes, top line can go to the levels that we have actually done. And I think the services business will grow at its own good pace. Retail and wholesale business will grow quite strongly. The wholesale business will grow much more faster coming to financial years. So I think these three things combined, we should be able to deliver that whatever we have said, sir. Fundamentally, the company should be able to generate the same capital of return on capital employed, ROCE and ROE, and I think in fiscal 26 or so.
So the figure that is stated for your volumes last year was approximately 1,060 kgs, right?
Correct, sir.
So where do you see this to be growing in the next year?
So the next year it should be in the range of 1,600 kgs, sir. 1,600 to 1,650 kgs, let's say.
All right. Okay, thanks a lot.
Yes. Thank you, sir.
Thank you. You may press star and 1 if you wish to ask a question. The next question is from the line of Rajesh Singla from VTG Capital Services LLP. Please go ahead.
Yeah, hi. Hello, sir. So regarding this ROCE and ROI, whatever you are talking about, so in this, should we think about, you currently have a significant amount of unused capacity. So your manufacturing capacity is only operating at 35%, and your retail showroom is also having significant amount of unused capacity. shouldn't we think about that this ROCE will also expand as we move forward to a larger number of revenue growth? Because 400 to 500 growth from the same store which you currently have, that will also boost your ROCE going forward as compared to 21%-22% what we had in the last couple of years.
So this could have been right if the major investment of the business would have been in the asset class of it. But if because in our case we are into a high working capital company, so the ROC, the whole capital, the huge deployment of capital is there in the working capital zone, that is stock and inventory. So the infrastructure to facilitate the growth is 100% there. But just because of the unutilization of the infrastructure, being present, would it is difficult to understand, that will it lead to an increase in ROCE. Sir, generally, I can say that if you talk about the asset turnover, surely will be better, going forward, because it will be the same kind of, let's say, investment, and with the same kind of retail store, we are able to generate much more kind of revenue. So asset turnover can improve. For ROCE to improve, I think inventory has to be looked on, sir, because we are heavily we are invested into inventory, and that is where we actually get our returns from.
Thank you.
Thank you. Ladies and gentlemen, you press star and 1 if you wish to ask a question. To ask a question, ladies and gentlemen, you may press star and 1. Participants who wish to ask questions may press star and 1 at this time. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Mr. Harit Zaveri for closing comments. Over to you, sir.
Thanks investors for asking questions, and as the words I have been stable. Whatever I have committed, whatever the company has committed, I think we are looking forward for that kind of growth in the coming couple of years and henceforward. We are what I think the market has given us faith, and with that kind of results coming in, I think I can on a one sure note I can say that whatever has been said and whatever has been committed will be delivered, and we are upon it. Earnings call and the annual results are the right way that a management can get in a conversation with the investors or who are the interested people. But apart from any of this, I think there has been a lot of words said and spoken, in and across media and to the investors already, and these are the same words, these are the same results. So yes, we are upon our words, and the company will show results, in the coming 2 years or so. And thanks a lot for the interest. And if anyone has got any other queries, you can 100% mail the company, for their any further queries that they have. Thank you.
On behalf of RBZ Jewellers Limited, this concludes this conference. Thank you for joining us. You may now disconnect your lines.